In a shocking tale of a nation's downfall, join us as we unravel the enigma behind Lebanon's economic collapse. From the heights of prosperity to the depths of a financial mess, discover how corruption became the silent architect of Lebanon's economic crisis. Stay tuned as we delve into the intricate web of Lebanon's economy, unearthing the unsettling truth. To fully grasp Lebanon's economic unraveling, we need to travel back to 1975. The scars of a brutal civil war between Christians and Muslims were etched into the nation's fabric for 15 agonizing years. The result? Deaths of over 120,000 citizens and a torn social fabric. In 1989, a fragile peace was brokered, birthing a sectarian government designed to distribute political power among religious groups. This setup, intended to be temporary, became a breeding ground for corruption and power consolidation, setting the stage for the country's future economic struggles. After the war's devastation, Lebanon sought reconstruction. As political stability grew, investments poured in. With foreign aid and incentives for foreign investment, the government revived the nation. From 1990 to 2000, GDP surged 400%, with trade, tourism, and finance comprising 60%. Remittances from the Lebanese diaspora boosted growth. Yet, Lebanon's import-dependent, service-based economy tied it to the US dollar. Pegging the local currency to the dollar in 1997 strengthened the unstable local currency, enhancing economic stability and facilitating government financing. Yet a significant portion of capital flowed into politicians' pockets, rather than essential infrastructure. At this juncture, economic prosperity masked the government's corruption and mismanagement, eluding public scrutiny. The shift towards darkness started when foreign aid dwindled. Politicians sought new avenues for personal enrichment. Most politicians maintained direct affiliations or outright ownership of national commercial banks. Picture Lebanon's financial system as a multi-tiered cake. On the top tier, the government fragments into pieces, each affiliated with a different sect. Below, we find the central bank, serving as the core of this arrangement. Finally, on the base tier, stand the commercial banks. How did the Lebanese government essentially run a giant Ponzi scheme in the country? Their plan was simple: lure foreign capital into the central bank's reserves. Offering high interest rates, the central bank attracted commercial banks to deposit there. In turn, the banks parked their clients' funds due to appealing returns, confidentiality, and a conservative approach. With enticing returns and confidentiality, Lebanon became a money hub. Foreign deposits poured in, and banks funneled funds to the central bank. This amassed substantial foreign currency reserves, enabling the central bank to lend to the government. As the government borrowed from the central bank, it kept inflating the national debt. As infrastructure crumbled and services deteriorated, politicians amassed wealth, while the populace suffered. Just as the U.S. banking crisis showed, shaky foundations inevitably birthed the perfect storm, a tempest threatening to dismantle the house of cards. Yet in this narrative, it's not a bank hanging by a thread, but an entire nation's economy on the precipice. So what were the factors that triggered Lebanon's economic unraveling? Lebanon's troubles began in 2011, when conflicts in neighboring Syria triggered a series of events. The influx of around 1.5 million displaced Syrians strained an already fragile social system, overwhelming its capacity to support both its population and the newcomers. Escalating regional tensions eroded investor confidence, causing foreign investments to dwindle. Riyad Salameh, a former Merrill Lynch banker and head of Lebanon's central bank, stepped in with a solution. He introduced complex financial mechanisms that promised high returns to commercial banks in exchange for new dollar deposits. This strategy briefly brought in capital, despite ongoing regional challenges. However, this success carried a heavy price. The intricate financial mechanisms increased liabilities for both banks and the government due to soaring interest rates. While it seemed like a magical solution, it transformed national debt into foreign currency debt, leading to spiraling debt servicing costs that consumed a significant portion of the country's annual budget. As foreign currency reserves rapidly diminished, Lebanon's grim reality came into view. By 2017, political instability led to the prime minister's resignation, followed by a government unable to enact promised reforms. Foreign investors pulled back, leaving Lebanon on the brink with no new inflows of funds. By 2019, the debt-to-GDP ratio reached a critical 170%, forcing the government into a foreign debt default. Unemployment surged, triple-digit inflation hit hard, and the nation's prosperity crumbled. A global pandemic further exacerbated the situation, but worse was yet to come. What happened next was the final nail in the proverbial coffin. On August 4th, 2020, a massive explosion devastated Beirut, prompting the entire government's resignation. The explosion was a result of widespread corruption and mismanagement. The catastrophic event claimed lives, caused billions in damages, and destroyed the port responsible for 70% of Lebanon's imports. Import costs skyrocketed, intensifying inflation. Fueled by mounting frustration, protests erupted, demanding a comprehensive political transformation. However, internal divisions among activists hindered tangible progress. Desperate for funds, politicians introduced a controversial tax, taxing WhatsApp's video call features at 20 cents daily. This disproportionately affected the poor and sparked further unrest. The outcome? Mass protests driven by disillusioned youth clamoring for a complete political overhaul. The existing system favored the elite, marginalizing the majority. The political turmoil alarmed banks, which started withholding foreign reserves, effectively trapping people's deposits. With most savings in bank accounts and international remittances, significant dollar-denominated deposits were held locally. Stripping these savings triggered outrage and eroded faith in the local currency. Exchange rates plummeted as people rushed to buy dollars on the black market, causing the Lebanese pound to fall from 1,500 to an astonishing 100,000 to 1 ratio by April 2023. Lebanon's lira and the dollar, once side by side, were now worlds apart. The repercussions were profound, altering supply prices and livelihoods, leaving the nation in turmoil. Prepare yourself, for the numbers are nothing short of staggering. Since 2018, Lebanon has borne witness to the nightmarish descent, shedding over half of its GDP. By July 2022, the currency collapse had plunged the nation into the abyss of hyperinflation, driving prices of certain goods up by tenfold. By the close of 2022, inflation had surged to a jaw-dropping 124%. Let's put that into perspective. Imagine someone who once earned $900 per month now left with less than $50. And the grim reality worsens. Since 2017, the minimum wage has remained unchanged. Yet even this measly wage is a blessing to some, considering that a disheartening 30% of the population grapples with unemployment. How did hyperinflation impact the lives of ordinary people in Lebanon? A whopping 70% of households struggle daily to make ends meet. In over a quarter of these households, an adult has skipped meals due to the dire lack of resources, be it money or food. Financially strained parents are even resorting to sending their children to orphanages. Fuel scarcity and electricity cuts create major challenges. Gas station lines stretch for hours, and electricity is only available for a few hours daily, causing a dire crisis in hospitals. Water services are compromised, leading to disease outbreaks including cholera. Public teachers strike due to unlivable salaries. Local businesses teeter on bankruptcy due to electricity shortages and plummeting purchasing power. Desperation fuels crime rates, and citizens even resort to robbing banks to reclaim their own funds. A mass exodus is underway, with departures surging 450% between 2020 and 2021. However, this triggers a debilitating brain drain, depleting Lebanon's skilled workforce. Despite the catastrophe, those responsible remain in power. Hints of corruption emerge, with billions fleeing to offshore accounts after the 2019 protests. Bankers invest abroad, and even former head of Lebanon's central bank faces money laundering and embezzlement charges. As Lebanon's distressing landscape unravels, the years ahead may reveal the depths of the corruption that brought this once thriving nation to its knees. What lies ahead for Lebanon's shattered future? Repairing the nation's path is no easy task. While economic solutions appear straightforward, reality is more complex. To revitalize vital services like imports, electricity, water, and medicine, an influx of funds is crucial. Simultaneously, an overhaul of banking and social services is necessary. Without these reforms, Lebanon's problems will persist and worsen. To rebuild trust and autonomy, the national currency must detach from the dollar. These measures could provide stability, but the intricate reality complicates matters. Past efforts have stalled due to political deadlock. Despite negotiations with the IMF for a bailout plan, Lebanon's rulers resist restructuring that would challenge their power. The root of the problem is Lebanon's entrenched sectarian politics. As long as this persists, elites lack incentive to change, regardless of people suffering. In response, citizens are dollarizing the economy, trading in US dollars to bypass the local currency. currency. This move aims to stabilize, but it comes with risks that could deepen poverty, as seen in other nations. Lebanon's shift to a cash economy diminishes government tax revenues. The path ahead is challenging, yet history shows recovery is possible. Hope remains that Lebanon can rebound and emerge stronger from its economic catastrophe. Curious about the financial history and future predictions? Don't forget to subscribe and check out our video on skyrocketing gas prices and our crystal ball vision of the future.